This podcast is provided for informational purposes only and should not be relied upon as legal, business, investment, or tax advice. All opinions expressed by podcast participants are solely their own opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Due to industry regulations, participants on this podcast are instructed not to make specific trade recommendations nor reference past or potential profits, and listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.
Welcome to the Hedged Edge by RCM Ag Services, where we're getting out of the field and onto the mic to bring you weekly market updates, commentary from commodity experts, and monthly interviews with the biggest names in agribusiness. Welcome to the next episode of the Hedged Edge. I'm your host, Jeff Eizenberg, and I'm here with my co-host, Ben Hetzel. Ben, last week we couldn't record. I apologize. That's on me. I lost my voice.
Yeah, it was a bummer not to get to see you last week, Jeff. So glad we're able to do this and looking forward to our discussion today. I think it'll be really educational. We got two great guests with us. We brought Dwayne Bowman back. He's president of Dakota Western Bank in Bowman. Well, he sits in Bowman, but he oversees numerous branches. And then we've got another guest that joined us today from the crop insurance side. So we'll intro her in a moment.
Perfect. Yeah, excited to have the group back. And Dwayne, thanks for jumping back on. Today, really what we want to do, a quick update. We're well into harvest here, so check in on harvest, but also talk a little bit about the fact that the crop insurance guarantees out there are likely not to pay out big payments. And that's a reality that farmers have to think about and everyone has to discuss. And so what are the real decisions that need to be made? What harvest marketing plan do you have, and do the farmers in our area have that we can help advise on? Are they going to sell off the combines? Are we going to store it till March or July? These are the million-dollar questions that we're going to jump into today. So one extra thing we wanted to add here today is, so when we're talking about harvest and updates, we want to hear from you. We've talked about hitting us up on Twitter and Facebook. Let us know what's happening in your area. So with that, Ben, let's get a quick update on harvest. How's things looking from your side?
Yeah, we come out of the small grains harvest here. It drug into September further than normal. It was a long spring this year due to the moisture in our geography. So it seemed like it took a little longer to get this wheat harvest and the canola harvest done. Plus some additional rains and stuff going on during harvest kind of delayed things for a lot of producers. So that's pretty well wrapped up. Seeing some quality concerns in some areas on some of that. But now we're kind of into the beans, not as many bean acres out in this geography on the fringe out west here, but they're rolling through that pretty fast. Quality is up and down as we froze. So we've got areas that definitely seeing some issues there. So it'll be good to have that discussion with in regards to crop insurance as well. I think some guys have actually started rolling on some corn this week. Some drier regions where it's a little lighter soil and guys plant short maturity corn. So there's a few guys going on corn, and it won't be long and we'll see some sunflowers. They're getting pretty black. So that's kind of where we're at with what's going on out west here.
I gotta mention you brought canola up. You dropped a little tidbit the other day when we were talking that you are one of the largest exporters of canola out of North America. Do you want to care to comment on that?
As far as we can tell, we are the largest shipper of canola in the U.S., and that would put us at the top of the export category as well out of the U.S. So not a lot of us doing that, but it's pretty cool to be on top.
Oh, yeah. Everybody loves to be on top. That's great. Well, congratulations.
Thank you. My comment to you was we're going after the North American number. That's a big number because there's a lot of canola in Canada. So I think it's here. I think we could make our mark. So,
Love it. Well, I'll give you a quick update. I think most of the listeners know by now. I live in Ohio. Harvest update out here is it is dry. Everything you hear on the news, in the radio, what you read, it is super dry out here, and it's been that way for months. Actually, it was the driest August on record. And as I drove around and saw the fields from mid-August all the way through Labor Day on through here in October. Not much has changed. Dust is in the air, and I expect the yields to be down significantly. So want to be sure to share that from boots on the ground out this way.
Thanks for the update. We're kind of hearing some of that same stuff, that yields maybe are not what people thought in some spots, and just don't always know boots on the ground what's really going on out there. So it's good to hear.
If you want to listen back to this episode or find past episodes of The Hedged Edge, visit kbjm.com or kndcradio.com under Listen Live and podcast options, or either station's free mobile app under podcasts.
Yeah, let's change gears here a bit and bring in our additional guest. We have Lacey Schultz from LJ Insurance Agency. Lacey, are you with us?
I am.
Hi, how are you? Thanks for coming on.
Yep, you bet.
Well, we're jumping in. We just went over the harvest update, and want to check in on insurance. So we're setting price right now for corn in October, and you've already set the price for wheat. You've had quite a bit of volatile weather, which is pretty customary. You've got hail, tornadoes, freeze. Ben already mentioned where all these things where insurance comes into play. So my guess is you've been pretty busy.
We have. Yep, that frost created quite a bit of work, but we're really in kind of a wait and see situation to see what that corn comes in at for test weight and things like that.
Got it. So the freeze mostly affected the corn, and that's what your thoughts are?
Yeah, some beans. The flowers seem to fare pretty well. The bean crop, I think overall is going to be better than expected from the frost, but the corn, it's so variable. So from an insurance standpoint, we just kind of have to wait and see what it looks like when they get in there.
Got it. And the hail really hits those beans pretty hard as well.
Yes, we've had 14 pages of claims. So, from the hail and from the frost. So a lot of damage out there. Crop insurance really did a good job of taking care of the guys with the hail in particular, just because commodity prices are so low and crop insurance prices are, as you know, based on futures. So they were actually covered very well for those situations.
Got it. And your read on the prices here, the fall harvest prices versus the yield, is that we're really not looking at a claim for most other than these acts of God.
Right. Yeah. If you're harvesting, 30 to 35 bushel wheat for whatever reason, those lower harvest prices are kicking in that revenue part of their insurance. But for the most part, yeah, we're not seeing any claims with the bigger harvest, and we just need some commodity prices to go with it.
Well, that's why we got Ben here to will the markets for us. But in the meantime, there's been quite a bit of discussion about the marketing plans that people are needing to think about here moving forward. And insurance is always a part of everyone's plan. Is there anything new that's happening insurance wise? You mentioned when we talked offline, the big beautiful bill had some elements to it that ultimately impact insurance. Anything you'd like to share with the listeners?
Yeah, so if you're a big SCO, ECO supplemental coverage, if you like to buy those options, that subsidy is increased from 65 to 80%. I have quoted that for our Montana and South Dakota winter wheat guys. That is very, very inexpensive now, so those farmers will be happy to see that. The other big thing is the Beginning Farmer Rancher program has been went from 5 to 10 years. So basically, if you've been farming less than 10 years, you want to make sure that you get re-enrolled in that program. Agents should kind of be doing that automatically, but I would definitely make sure that you're checking with your agent to make sure you're getting re-enrolled in that program. The other thing would be there's more premium support that came out of that bill for optional and enterprise units. It's not I don't think when we quote in March, you're going to be like, oh my gosh, my crop insurance is way cheaper, but it is there nonetheless. So, so positive things moving forward. Crop insurance isn't perfect, but a lot of these things were steps in the right direction.
So
Perfect.
Lacey, with the beginning farmer program, did it outline the parameters? Are they extending the 100% of T yield, or do you know any of that at this juncture?
Basically, they just extended premium subsidy support. It varies by how many years you've been farming. The best is 1 to 5, and then it tapers off the last through 10. So, but you really do notice those savings on your quotes and your premium. There's a little bit of how it calculates in loss years, how it kind of preserves your APH a little bit better than a farmer who's not in the BFR program. But that's getting in the weeds a little bit. But it's mostly just that premium support. And 10 years is a long time, I feel like,
Yeah.
for a guy to be in that program. So
I just had one other thing. There's been some talk about base acres and stuff. Was there much to that?
that quite honestly, that is not quite as clear yet. That's not so much an RMA as a USDA situation, and there's not a whole lot of clarity how that's going to work yet. There is some material I could send out if needed, but I'm not very versed on that just because it's more the USDA. One other thing I will mention for 2026 is there may be a program. It's briefly come out. The details are not, but it's called CLIP. And that could be basically characterized as like a blanket for your crop insurance, like an overall coverage situation. So as we get more information on that, we can certainly get that out, to everyone. But it's just something that's briefly been mentioned at this point.
Perfect.
So you
And
don't have an opinion on that at this stage? It's still too early?
I guess for me, it would really need to be quoted, and then I would have a pretty strong opinion on whether it was something a person should do or not. Our agency, we're big into the whole farm revenue protection program. We really like the coverage that provides. I feel that it's a very strong program above and beyond typical multi-peril insurance. So I guess we're just going to have to see the mechanics and the pricing of it first.
Yeah, I'm glad you mentioned that, because I think that's kind of your mantra: saving producers money, protecting their investment, all the way through. And that's something that I know that you've been actively involved in your career at the federal level and some boards and different committees or whatever that you've sat on. Bring a wealth of knowledge in this crop insurance arena back to the producers in Southwest North Dakota, Montana, and Northwest South Dakota. So really appreciate those insights.
Absolutely.
last question I have for you, Lacey. Cattle prices still at all-time highs here. How about the LRP insurance? Are you seeing a lot of renewed interest in that with markets trending this way?
Yeah. Yep. There's a lot of interest in LRP. One thing I would encourage ranchers to have a look at is insuring at like a 92.5% level instead of 100% level. You're still getting really, really good coverage there, but you're getting a higher subsidy and it's much more affordable. So that would be my very important thing I would tell ranchers when they're looking at LRP. But it is a strong program, and it's nice to have that option. I mean, I feel like ranchers don't have the protections that farmers often do. So it's nice to see LRP working really well for them right now.
That's great advice. Thank you so much for that.
You bet.
Want more agricultural market expertise? Listen to full episodes of the Hedged Edge podcast wherever you get your podcasts, or visit rcmagservices.com. Get the complete market analysis and strategies you need to succeed.
Shifting gears a bit over into the macro side of things, big picture, we've got Dwayne, you're at the bank. We've got interest rates have been cut. They're forecasted to cut a bit even further. How are things shaking out at the bank? People thinking easy money is going to be better moving forward?
Good question. Thanks again for having me on, Ben. Jeff, the Fed is definitely in a difficult position right now. It's going to depend on the strength of the economy going forward. There's definitely a push and pull effect in place right now, and it's going to be interesting to see who wins. Obviously, we know the direction Trump wants to see interest rates go, and Powell doesn't seem to necessarily agree. And the economy ultimately probably be what decides that, makes that decision. Right now, the biggest concern is probably stagflation. So it will be interesting to see how between unemployment numbers, inflation, the impact on tariffs, all that shakes out. But the expectation, we just did see the Fed dropped interest rates 0.25%. The expectation is still probably at least another 0.25% before year end, possibly 2 rate cuts. We might see a 0.5% cut before year end, and then another drop is expected in 2026. But really, when you look at it, Jeff, it's a pretty minimal impact on the overall impact on the farmer rancher. Right now, if your input costs are $200 an acre, and last year, for instance, if you were paying 9%, this year you're paying 7%, you're talking maybe about a $4 an acre savings. So it is not it's not substantial enough to have a huge impact.
And then the other element comes as we're in the harvest season is cash versus carry. Obviously, you just mentioned paying down an operating line that might be 9. That's ideal, but at the same time, there's carry on the board and there's potential opportunities ahead. What is your position or thoughts from the bank side? Do you prefer farmers to kind of true up and get back to square one with you here by the end of the year, or you like to see them carry and hold on into next year?
Yeah, the anticipation that I have is that they're going to hang on to it, that they're going to carry it for a while. So, and there is a cost obviously to doing that. Ben, what's storage cost at Scranton Equity now?
6 cents, which is too cheap for the carry in the market, for sure.
Yeah. So 6 cents, you look at, of course, if they hold on to that for 12 months, then you're talking 72 cents. So, almost a buck a bushel to hang on to it for a year. I talked to a lot of my producers last year on interest rates, on the cost of hanging on to it because of, if it's sitting on an inventory loan, if it's sitting on their operating loan. And last year, when grain was, say, let's use wheat and say $6 a bushel, they're hanging on to that and they're paying 9% interest. You're talking 54 cents to hang on to it for a year. So between storage and between the cost of interest of hanging on to that, you're looking at, $1.30 or more a bushel. They certainly didn't see $1.30 rally. Actually, they saw it go the other way, about $1.30. So a tremendous cost to hang on to it. But yet, as low as it is this year, so now we're talking, say, $5 wheat and 7% interest rates. So now you're looking at maybe 35 cents a year to hold. So a little less cost to hold. So I think you're definitely going to see that gamble, that they're going to hang on to it, that they're going to see this market rally. I'm not saying that's the right thing or what banks want to see, but that's certainly the expectation. I think what we saw, and Ben could probably attest to this as well, that the selling that was taking place at harvest was probably because they didn't have the storage.
Yeah,
that
definitely
was the only reason it was coming to town.
And even post-harvest, we're seeing that push. Like, I need 40,000 a room for this, and whatever. The guys that bag, obviously, they have endless storage for a time. But yeah, it's kind of interesting. One of the things that I want to throw out there too is we've seen a lot of bugs in the new harvested grain coming in this year. Grain weevils in the field. I've seen it before. Actually was on a grain bin during harvest when my dad was cutting wheat years back, and that was the first time I'd ever seen it. I did not realize those buggers were in there, but the bin top was covered. And I was talking to a farmer the other day, and I said, be on the lookout because these bugs are in there, and if guys just throw it in these bins and don't condition it and don't pay attention to it, we come back in December, January, February, we're gonna have bugs. And so anyway, we're seeing some problems already with old stored grain because of the moisture. So we've had some bug issues, and so guys got to be aware of that. And the reason I bring that up is you talk about interest costs. Well, there's other costs to carrying grain. You've got insurance on that grain that you should be carrying insurance anyway, and of those inventories, and then also the quality concern. You got to keep it in condition. So you're likely running fans. Electric costs are not cheap to run those things, and so there's additional costs to it. And in a year where guys are trying to figure out, especially on wheat, how much am I going to lose per acre? these costs can start adding up pretty fast.
That's a great point, Ben. You've got shrink in there as well. That's important to think about. And one thing that you mentioned in one of our last episodes, Ben, and I'd love to get Dwayne's perspective on this or position, is that the reality is people are going to store grain. Dwayne, you just said it, they are. But my question and what we really need to drive towards is helping people to realize that they should be thinking about marketing the grain that they're going to store in advance. Because you mentioned, Ben, the last time that every year, no matter what, people are thinking, I'm not going to market my grain until I harvest it. Well, they have grain left over already, and they're going to plan to refill their bins at least partially. So, what I'd like to hear from Dwayne, do people constantly have grain in their bins that is unmarketed and should be forward priced?
Yeah, I guess I can start on that, and yes, we would love to see that grain move a little quicker because then we know where we're at. Lacey talked about this as well. We're still in this wait and see pattern, see how that corn comes in, see the condition, the quality of the wheat that they're going to sell. So at this point, we really have no idea what their loss is going to be. We expect there's going to be a loss. We know that, even with record, I guess, but well above average yields this year with the price that we're having and the discounts that are going to be there between, the light corn or quality issues on the wheat side, we know there's going to be some losses. So we would love to see that go into town a little bit earlier, just so we could, as a bank, that we could see where these producers are at, start making some plans. We know we're going to have to be capitalizing some losses. Unfortunately, it's never a good position to be in. But the earlier we can make those decisions, the earlier we can sit down with the customers and start putting together plans, the better off we are. So yes, that's the encouragement we're going to have is them, meeting with, talking to Ben, talking to brokers and seeing, okay, what can we do if we need to sell this, if we start moving this now, avoid some interest costs, avoid some storage costs, but we still want to have some upside on that market. If the market does rally, how can we leave that open? So that's the decisions we want them to be talking to somebody on, making some plans.
If you're enjoying today's show, check us out on Facebook. Just search RCM Ag Services for market updates and tips. Find us on Facebook today.
Yeah, and Ben, in terms of opportunities at the elevator for HTAs and forward pricing and forward contracting, what are some of the solutions that you're suggesting and talking to people about and brainstorming ideas on right now?
Well, we've talked about it before, Jeff, and this isn't anything new to Dwayne either. It's the basic to arrive contracts, selling the carries. We're getting to a time in the year where you start to see that Jan, Feb, March bid out there. Basis is historically pretty wide right now. We've seen this basis in this kind of territory we're trading in right now for the last few years. It's not uncommon for us to be 70, 80, even unfortunately 90 under. It used to be crazy wide years ago, but it seems like it's more the norm now to be, above 60 under for wheat anyway. And we haven't seen it as much in corn. Corn is still maintaining more of a traditional baseline basis of that 50 to 70 under out our way. It does narrow up at times, but it seems like that's year in and year out. It's right in there. So that one is a little bit, probably more palatable to the grower to see that basis that we're experiencing today. But it's really the wheat one I think it's got all of the producers kind of perplexed a little bit. Like, am I going to get a basis break here and post harvest? And is this, maybe we catch a rally on the board, we can pick up 40 cents somewhere in this market, and my suggestions have been to quite a few producers, you got to start planning out, your logistics and when you want to get into the elevator, because with big crops come congestion, and not everybody, it seems like when basis does move, everybody wants to sell, and then it forces basis back out. Or if there's a big futures rally, everybody piles on, and then you got basis just in shambles then. And so we really need to be watching these individually, like you said last episode, Jeff. We have to segregate them out and start working on them individually. If futures are what looks like the opportunity to take advantage of, let's be doing that with Hedge to Arrives or in our own account with our brokerage firm. We can help with all of that and get things set up for a producer. So outside of that, basis, there's carries in the futures, and there's some narrower basis out on the horizon. So maybe just have that conversation. What can I lock in on a flat price basis or a flat price, just to be done with marketing some grain, because most guys are sitting there with almost all of it unprotected, whether it's corn, wheat. We have moved a tremendous amount of canola, and I think we're going to be way ahead of last year's uh, pace by the turn of the calendar. So guys have really taken advantage of a market that is profitable, which is good. Experiencing a lot of congestion on that, but that's at least a positive sign that guys are taking advantage of certain commodities that or crops they're growing and hitting those markets that are paying them a premium, to what some of the other ones are, and they can lock in some profits.
That's good. Good advice. And then the other thing that we've talked about before, and I think it's worth repeating here, is that we can't just look at what's right in front of us. We have to look ahead. We got to look possibly even looking at the 26 crop already. There's some decent prices on the board due to the carry that it's built in. And it's going to be important as we move through this harvest and then get to the beginning of the year to see if we can identify some of those profitable levels that are looking attractive, at least, break even. Now, if you forward sell and it's at a break even price, of course, you're not happy that it's break even, but is break even better than losing money? And if your worst sale is a break even price because the market rallies, so be it. That's where averages come into play. So always a
That's really
reminder,
what
keep ahead.
Yeah, that's perfect, Jeff, because that's really what they have to do is work on an average. It's not swinging for the home run. It's, as we've referenced baseball terms in the past on marketing, it's hitting singles and doubles and just chipping away at it. Even in our business in the co-op, we don't always just take the full chunk right off the bat. We layer into things, whether it's inputs or even our marketing strategy for what we anticipate growers to do, which we got to be careful, obviously, because we are expected to deliver on that contract, because we're not just out there, gambling in the market. So, but you do have to forecast some things, and you have to forecast freight. So there's risk in this deal for everybody, and so layering in and having a position is the ticket. Well, it's no different for a producer. They should have a position other than just all cash, throughout the year. And to your point, we need to be looking out further and further. And one tool that we've used a lot, and this feeds into what Dwayne mentioned, is selling some grain with some upside opportunity. Obviously, the changes in the Minneapolis market, as you're familiar with, Jeff, and we've talked about it in our marketing meetings that we've had, the options kind of went away, and that was a nice tool when it worked for the producers to re-own grain or take some premiums out of the market for selling grain. The quotes I've been running on some OTC stuff aren't real great, but it does give you something. If you are selling grain anyway and you've got a lot to market, that tool is a pretty good tool. We've used it a ton. They do have double up features on a lot of those where you might potentially market twice the amount of grain on that contract as what you originally put up face value. But if you're sitting on tons of inventories and you've got time to market it, and that's what your plan is anyway, it works really well.
Oh yeah, there's plenty of tools out there. The question is, are producers willing to have the tough conversation about getting ahead? And that's what we're talking about here today, is getting ahead and realizing that there's strong yields out there this year. You're going to carry a lot of grain from this season into next. At least you're going to be storing it. You'll be looking for new basis opportunities, of course. But at the end of the day, there's always going to be grain in the bin that needs a home and needs a price. And that's the piece that, Ben, myself, our team, we're happy to talk with you about at any time. Is, what price is right, and what is your I would price? What Ben's talking about the OTC and some of the structures that are done through cash contracts. By coming up with an I would sell price, Ben and the team can reverse engineer a price for you to say, okay, here's the risk of taking on that type of a trade. So a lot of education goes into learning about these products and learning about these sale opportunities, and other people also interested in re-owning the board. You hear that a lot. And if you are going to sell off the combine this year and you feel that there's going to be a rally, or we think the markets are going to trend higher, maybe China comes in and buys from us. We don't know. There's always ways that you can re-own the board in order to participate in the upside.
Yeah, and one comment on that, you brought up China. I was listening to a webinar of a market analyst, and they made the reference to the tariffs, and we didn't really talk about it yet, but the conversation around Trump saying would use tariff money to pay, just send some of that back to the farmers. He wants to use some of it for some help there, and China and Japan are the two that have been hit the hardest by the tariffs with the U.S. And so here we are on one side, we're hoping that China wants to eagerly come buy our goods, all the while we're hitting them the hardest with our tariffs. I don't, that should not be, back to the marketing strategy is not built on hope. There would be a lot of hope in that statement, and so having a plan and looking out for it's tough to do, especially when they're in the fields doing the work. They don't want to be thinking about this stuff. It's the prices are flat pressing, and that's causing a lot of problems as well, mental health issues for people. And thankfully, these rural communities have a ton of help on that front as well. We haven't touched on that topic, but there's help out there, and definitely encourage people, if you feel like you're struggling, reach out. And for people listening that see it or see changes in behaviors, speak up, because it's real. And but aside from that, there's tools out there. We've referenced them, but in addition, we've also talked about the team, your team. Well, that includes Dwayne for DWB and their customers, or whatever the bank is, their crop insurance. We'll sit down together, all of us, and have conversations around how can we help, or what should this look like in a situation where that customer wants to engage that conversation with all of us in the room, and try to make a plan together of how we pull through it, especially if we're leveraging losses and trying to provide some gap financing for guys and in their operations. And so that team is super critical in tough times, and I think we're going to have to see more of that joint conversation going forward.
I think that's a really good point, Ben. I see this as a so much different time than the 80s. Right now I think we have so much better resources. We are partners. We're in this together. Between the equity of the banks, nobody wants to see anybody failing. So everything's going to be done possible to help people get through these difficult times. And we can't sit here, like you said, and have the expectation or have the hope. We have to start putting together a plan. I do hope there's going to be some government payments, some disaster payments coming out, but right now with the government shutdown, that's probably going to be delayed. there's most likely going to be a new farm bill put in place in the next, hopefully few months, but that's really on hold right now too. And hopefully the timing of, as low as commodity prices are, will actually be a good time for a new farm bill to be issued. But all of that's kind of on hold right now.
No, thank you guys both. And it's been a great episode. The reality is that you've both just said it. This fall is not about waiting or hoping for insurance or hoping for the market to rally or hoping for a government payment. It's about making real decisions. It's about whether you should haul a grain to town, put it in the bin. Either way, you have to have a plan. And the reality is, the most expensive thing moving forward, other than storage, is indecision. So let's make this fall a great fall. Let's get excited about the great crop that you guys have just harvested. Bring it to town, get it on the board, get it sold, and let's look to next year to hope for some good prices, but realize that we need to have a plan and use your team, as Ben said, to team around you to help make those decisions become a reality. So thank you guys both again. Reminder to our listeners that we want to hear from you. Tell us what you're doing this fall. Let us know what you have going on with your harvest. How do things look? How do the crops look? And what is your strategy? You can reach us at 888-875-2110, and we'll tackle all of that in our next episodes. Thanks again, guys.
Thank you, Jeff. And thanks again, Dwayne, for jumping on with us, and really appreciate Lacey Schultz and LJS Insurance for stepping in with us today. That was super cool to have her on.